As the trade spat between China and the US continues to simmer, Beijing is working hard to project an image of calm and resilience back home. Following President Trump's latest tariff hikes and China's swift retaliation last week with its own levies on US goods, the focus inside China is shifting towards weathering the economic storm. With little sign of compromise between the world's two largest economies, the message is clear: buckle up. An unsigned commentary in the Communist Party's official newspaper laid out a familiar playbook, countering the economic fallout by stimulating domestic demand. Think potential measures like lower interest rates and other steps to keep the home front humming. This dimming prospect of a deal is already making waves in financial markets. Investors are understandably nervous, triggering sell-offs and fueling speculation about China's next moves. Could a more aggressive devaluation of the yuan be on the cards? We saw a glimpse of the anxiety as Chinese shares listed in Hong Kong, tracked by the Hang Seng China Enterprises Index, plummeted nearly 11%, a stark reminder of the volatility seen during the global financial crisis. Even with the People's Bank of China setting the yuan's daily reference rate stronger than expected, the currency still slipped against the dollar, and yields on China's 10-year government bonds dropped notably. What's the outlook? Experts aren't holding their breath for a quick resolution. As Bloomberg Economics puts it, China's retaliation is likely to result in further tariffs hikes from the US. A full-blown trade war is set to add more downside pressure on global growth. Beijing likely anticipates this and, according to the commentary, is prepared. The government seems ready to pull various levers to keep its economy on track. The plan involves boosting consumer spending with extraordinary strength, potentially cutting rates again, and pumping more long-term liquidity into the banking system as needed. Expanding public spending through a higher fiscal deficit and more bond sales is also on the table. These signals follow last Friday's tit-for-tat countermeasures, where President Xi Jinping's government responded directly to Trump's tariffs. This included significant new tariffs on US imports and hints regarding restrictions on crucial rare earth exports. Interestingly, amid the escalating tensions, China's Commerce Ministry also made a point to meet with around 20 American firms, including big names like Tesla and GE Healthcare, assuring them of Beijing's continued support. This outreach came just days after China announced an antitrust probe into the local subsidiary of US chemical giant DuPont, highlighting the complex mix of confrontation and selective engagement playing out. It's a delicate balancing act. Project strength and resilience domestically, hit back against US measures, signal economic support, and manage relationships with foreign businesses, all while navigating an increasingly uncertain global trade environment.